My name is Jack Hanney, and welcome to this week's edition of The Insider. You don't have to wait until September. September's come early. Gold was up $300 an ounce last week. It is at $4,350 an ounce. Silver is at $65 an ounce. Forecasts are as high as $7,000 an ounce based on the technical charts, if you were to look at those. Citadel Securities' Ken Griffin came out today and said there are 5 catalysts creating a powerful upside and setup for gold and silver. Those are, number 1, the dovish Fed rate repricing. Number 2, accelerating central bank purchases. Number 3, net short CTA positioning. Number 4, bullish options dynamics in GLD and SLV. That is paper gold and paper silver. And number 5 is a return and a resurgence of retail participation. It was reported last week that China had made its single biggest monthly purchase since 2023, when prices dipped to $4,000 an ounce. $4,000 an ounce seems to be the floor, the technical support, as well as the psychological support for physical gold, and $60 an ounce for silver. Since then, a wedge pattern formed in the technical charts for gold, some saying that it could go as high as $7,000 an ounce. Keep in mind, there's also the geopolitical uncertainty, the war in Iran, the closure of the Strait of Hormuz, the war in Ukraine, central bank purchases, not only China, but Poland, Kazakhstan, Turkey, are all reporting record purchases of physical gold and silver. Many were concerned about a rate hike in September, but we saw just now with the July jobs report that were reported last week, economists had forecasted an addition of 80,000 jobs in July, but there was a net loss of 23,000 jobs in July. And these are seasonally adjusted summer months. When college students are home from school, there should be summer jobs, whether it be at restaurants, whether it be hospitality. Meanwhile, we lost 23,000 jobs. So this means the probability, any possibility of a rate hike in September is off the table, clearing away any headwinds for physical gold and silver. There are concerns about the AI bubble, as we have seen, with the Mag 7 stocks performing poorly here in 2026, down double digits. We've seen Microsoft that had its worst month in a decade. We saw what happened with the SpaceX IPO, with Tesla. We saw what happened with Amazon and Google with concerns over the AI spending. Meta. I am not a certified financial investment advisor, and I don't give tax advice. Please visit us at www.patriotgoldgroup.com or call 1-888-488-5190. Again, that's 1-888-488-5190. Again, Citadel Securities is saying there are 5 catalysts creating a powerful setup for gold and silver, and we're watching as gold and silver is breaking out of these bearish, boring summer months, as we've been telling you, and are heading towards the end of Q3, going into Q4 with explosive upside potential. Thank you, and I look forward to speaking with you next week on an episode of The Insider.